According to Ark Invest Cathie Wood, in the firm's quarterly report released on Wednesday, the United States may be headed for a recession, and China's economy is expected to weaken significantly. We will be talking about Cathie Wood's stand on the matter in today's video. If you don't want to miss out on any important detail, stay with me till the end of the video. Without further ado, let's get right into the video. CEO of Ark Invest Cathie Wood noted in her letter to investors that the market will likely focus more on the prospect of a U.S. recession, a major slowdown in China and other emerging market countries, and a possible decline in inflation. Cathie Wood, Ark Invest star stock picker, cautioned that a downturn in China's economy might have a rippling effect on commodities prices and global growth. It is more likely than ever that China's recent steps to crack down on sectors such as gaming, education, and financial firms will lead to a policy mistake and an abrupt slowdown. According to Wood, the manager of the $19.7 billion Ark Innovation, ARKK.P fund, the top-performing U.S. equity fund for 2020. The flattening of the yield curve, or the gap between the 10-year and 2-year U.S. Treasury notes, indicates an increased risk of a recession and reduced inflation in the U.S. in the following year as a result of the turbulence in China's real estate market. I do think that the policymakers in China are beginning to play with fire, she said, adding, "We will look back at the period in 6 months and say, wasn't it obvious there will be a major and unexpected slowdown in China?" Although vehicle sales in China fell 17% year-over-year in September, Wood continued her bullishness on Tesla Inc., TSLA.O, the electric car company. After placing large bets on firms like Tesla and Teladoc Health Incorporated, TDOC.N, during the epidemic, the Ark Innovation Fund skyrocketed in value last year. Though the fund has suffered from rising inflation fears, its year-to-date loss is only 11.4% compared to the benchmark S&P 500's gain of nearly 17.5%. Others have hinted at a possible market decline as well, confirming what Cathie Wood predicted. It's been so long since the previous downturn, according to Christina Huber, Invesco's chief global market strategist, that the probabilities of one are increasingly high. Invesco manages $1.5 trillion in assets. To make it even more difficult for borrowers, the U.S. Federal Reserve has announced intentions to reduce its balance sheet while also raising interest rates. Deep value territory, as Wood put it, might be in store for inventive tech firms over the next 5 years, a position she has already expressed. As a result of the coronavirus crisis that has ravaged all over the world, she wrote, "Typically during a slowdown, the adoption of new technologies accelerates as concerned businesses and consumers are more willing to change behavior patterns." She added that the coronavirus crisis transformed the world significantly and permanently, suggesting that many innovation-driven stocks could be productive holdings during the next 5 to 10 years. It's ironic that she makes these remarks at a time when Ark Invest flagship ETF has lost 20% of its value this year. An additional 24% was lost in 2021, following the fund's stellar performance in 2020, which saw a rise of almost 150%. There are many notable companies among the fund's top holdings: Tesla Motors, Zoom, virtual health business Teladoc, Roku, and Coinbase. Although Zoom and Teladoc stock prices have fallen sharply over the past year, Wood has previously stated that the stocks offer a value as the firms continue to expand in sales and profitability. Thank you for staying with me till the end of the video. I hope you enjoyed every bit of it. If you did, please like and share the video with friends. You can leave your questions and thoughts in the comment section below. Don't forget to subscribe and hit the bell icon to get notified when we add new videos in the future. Thank you for watching, and we'll see you in the next video.